Welcome to Access TV, your access to real estate mortgage markets. Today we're talking H.A.R.P 2.0. First, Access Real Estate Lending is committed to offering H.A.R.P 2.0, and we believe that it is the right thing for the industry to do. We're behind it 100%. As mentioned in an earlier article in the Chico Enterprise Record regarding H.A.R.P 2.0, the industry is moving slowly, understanding the intricacies of how these loans are going to be originated, processed and underwritten, priced, funded, pooled, sold and serviced. Industry-wide, the process for the H.A.R.P 2.0 program continues to have moving parts as all lenders, investors, and warehouse banks continue to work through the technological challenges, general understanding of guidelines, and credit risk concerns. Fannie Mae and Freddie Mac have not been too clear about the particulars of H.A.R.P. What needs to be understood is that even though the government has mandated the ability for people underwater on their mortgages to refinance, it doesn't mean that every lender is going to offer these products, and at what risk to that lender. Just because the program exists doesn't mean that each and every originator of a H.A.R.P loan takes on no considerable risk. Think about it. Would you lend $150,000 to somebody who owns a $100,000 home? After the H.A.R.P loan is sold in the secondary market, if a borrower defaults and that loan goes back to the agency or lender that purchased it, and it's determined that some error has been made, regardless as to who is at fault, even the escrow officers, the originating entity or the lender and originator must buy that loan back from that purchaser or that agency or that bank with penalties and interest. It's a frightening thing for a lender to consider, and that's why most lending institutions in the United States are either sitting on the fence waiting to consider if they're going to offer the product or deciding not to offer it at all. Second, Access Real Estate Lending, we're ready. The most appealing benefit of H.A.R.P 2.0 is unlimited loan to value, LTV. So if you owe $220,000 on a $100,000 home, you may qualify within reason. A lot of rumors hit the market regarding no income qualifications or no minimum credit risk scores, and to put it simply, that's just not true. You still need to qualify for these loans, however, there is some flexibility. If your loan was Fannie Mae or Freddie Mac eligible and settled or closed before June 1st, 2009, you may be eligible. Currently, credit risk scores as low as 620 qualify for the program. If you currently have mortgage insurance, then that MI certificate may be transferred to the new H.A.R.P 2.0 loan servicer. You will be limited to a maximum of 4 owned properties if those properties are financed. If you own more than the 4 residential financed homes, you won't qualify. You will be permitted to add or drop qualifying borrowers as long as they currently reside in the property. Adding someone that does not live in the property to qualify will not be permitted. Non-owner occupant co-borrowers, not permitted. Second or vacation homes are eligible, as well as investment properties. If you have a home equity line of credit or a second trust deed, then you may subordinate that second, and HELOCs or home equity lines of credit are generally in second place as well. So regardless as to what that combined loan to value is, the first and the second loans combined together compared to the value of the home, you should qualify as well. Appraisal requirements are going to be relatively lenient, varying also from lender to lender. Even if the loan to value is greater than 100%, some banks, including some of our investors at Access Real Estate Lending, will allow for a property value or inspection waiver called a PIW, as opposed to an appraisal costing $75 instead of $450 or more. This has a significant savings to you, the borrower. Interestingly, with some of our warehouse lines, when you run the automated approval for the H.A.R.P 2.0 loan, the approval may or shall not ask for an appraisal. If it does, you may not qualify. So valuing the subject property appropriately before running the automated approval can be tricky. It's not rocket science. However, you'd better trust whoever's driving these particulars on your deal, or the deal is dead in the water as opposed to just being underwater. Last, expect delayed turn times for all lending transactions as banks' application volumes grow. Remember that the same underwriters underwriting H.A.R.P 2.0 loans underwrite purchase applications as well. Also, with interest rates declining in the last few business days, after seeing a substantial increase the week before, mortgage applications may be hitting positive levels not seen in months. On Tuesday, March 27th, 2012, we finally climbed back above the 100-day moving average, as you can see in this chart here. This is a significant move back to lower interest rates. And as a matter of fact, later in the day today, Tuesday, we did climb above the 25-day moving average in this chart, but you can see by the little candle wick figure that we ended the day just below that 25-day moving average. This is a significant move back into lower interest rates if we can manage to stay above this line or level of support. Also, in fact, yesterday, Fed Chairman Ben Bernanke said continued accommodative monetary policy will be needed to make further progress, end quote, to our economy, even in the light of unemployment figures lowering and economic growth seemingly on the bandwagon. Is this code for continued lower interest rates, or quantitative easing 3, whereby the government prints out money just to keep a band-aid and put a band-aid over our economy? The new Italian Prime Minister, Mario Monti, warned that Spain could cause the European debt crisis to spiral again. This was yesterday. Their budget deficit and GDP just aren't making projections. Regardless, we stand poised and ready to help our community navigate through the plethora of varying labyrinths when it comes to financing today's real estate world. As usual, Access Real Estate Lending is leading the industry in knowing, understanding, and continued community support, and we're proud to do so. This is Daniel Salas with Access TV signing out. Have a wonderful day.